Let's get across the market open now. Kai Chen joining some MPC markets. Kai, welcome. Of course, the focus very much on the Fed. We knew that rate cut was coming.
Yes.
What perhaps the market was a little shocked by was the dot plots.
Yeah, so it's a hawkish cut, and as people know, it's more about the expectations of what's to come, right? So they pulled the target Fed rate to 4.2% to 5%, but it's what really the Fed members are expecting next year that was more conservative than what people were estimating, right? So for September next year, people were expecting about 4 cuts to come, but that has really tapered down to about 2 cuts for the majority of members, right? So this is, but one thing to mention that this is the expectations from the Fed members. So it's not official or anything policy, but it's just a survey. But yeah, regardless, I think the market was not too they didn't really take that very well in terms of the reduced expectations.
Well, not really, particularly when you look at those risk assets. Equities taking a tumble.
Yes.
And also the likes of crypto, gold, they're all hit.
Just a general risk-off sentiment, right? So, yeah. I mean, Nasdaq's down about 3.5%. It's not a really good start to the Santa Claus rally. But also what we've seen is bond yields going up as well. So especially the shorter term 2-year yields in the US, as you would expect, because this is much more short-term focused. But the terminal rate still is roughly about the same. So the 10-year yield has gone up less. But yeah, no, I think the market is pricing in this Goldilocks zone where basically the Fed's achieved quite strong economic growth, or decent economic growth. Employment's in line. Inflation's tapered back, but I think they're just looking a little bit ahead, saying once Trump gets in, potentially a lot of the tariffs could be inflationary.
Well, in fact, Jerome Powell was asked that very question. He said the focus will be on tariffs, so he wants to wait and see, and then they'll react.
Correct. Yeah.
So we take a look locally, of course. SPI futures indicating we're going to be falling heavily this morning ourselves as well. So, which perhaps sectors are going to be under most pressure, do you think?
Yeah, I think the tech sector probably will have a bit of be under a little bit of pressure. What was it? Dicker Data a couple of days ago was down 10%. I think it will probably continue to be under pressure. I think with the mining stocks, I mean, they've been so, but that's a different focus. I think it's a more China-centric focus. But again, I think overall the market today will be very weak on the open. Sure.
So does that mean that Santa Claus rally, it's not going to happen? No, Santa's not arriving this year?
Oh, it's certainly a bad start, but we'll see. Traditionally, as we go into Christmas over the next couple of weeks, the trading volume really, settles down. People go away.
Yeah.
You could see it drift a bit higher when there's lower liquidity, but I think it's off to a really bad start. There's really no reason why it have a massive upside rally.
I mean, okay. So it's a savage reaction.
Yeah.
Does that potentially present a buying opportunity with some of those key stocks having tumbled quite significantly, particularly overnight on Wall Street, but also what we're likely to see here today?
I think you'd probably have. I don't think you need to be rushing in at the moment because at where we are on the index, it's fairly high. I think you probably have the luxury to wait until next year to place buy orders or get into some longs. I really think you can afford to wait a little bit here.
What are you favouring is when you come back from holidays 2025? Where would you be looking for that opportunity?
Yeah, I think, it's interesting. Financials obviously had a spectacular rally this year. So we've got some, but not really looking to add to that. Some like Clarity Pharmaceutical is one that we're really interested in at the moment, where it's had a decent pullback. It's still a strong company, but you might get those buying opportunities where these good small companies that have a pullback,
But we saw a big bounce from Clarity off the back of some news yesterday.
Yes.
I mean, so you already own it, do you?
Well, we made a recommendation on our watch list for our viewers to hold on one of the portfolios. But yeah, we generally really like clarity. So for some clients we did get in, but yeah.
Gee, biotech is so difficult though, isn't
Yes.
it? Because it comes down to that binary outcome.
Yeah.
Whether what they've come up with works or doesn't. So pretty hard to know, isn't it, ahead of time?
Oh, absolutely.
Particularly if you're in the trial period.
That's right. It's dependent on getting through the phases of trial.
Yeah.
But that with great risk come great reward. So going into these stocks, you've got to be wary, as you said, in terms of the expectations. But as we saw with Telix, with Clarity, and Urine as well to a certain point last year. When they do well and they exceed the market's expectations, you can really do quite well with some of these stocks. So.